Taking a look at our multiple choice questions for consolidated tax returns, I want to read the prompt first since we got a lot of information. What gain or loss will be reported on a consolidated tax return filed by Sunshine and Pierpoint for the current tax year? Just a note, something that I notice with AI CPA questions and questions that many people build out for reviewing the exam. If you've got parent-subsidiary relationships, whether it's on reg or financial or anything like that, a lot of times the parent will be P and the subsidiary will be S. Not absolutely critical, just something fun I noticed, and maybe it helps you throughout. Sunshine Corp is a wholly owned subsidiary of Pierpoint Corp, and they purchased land from Pierpoint for its fair market value of $10,000 on January 1 of the previous year. Before reading forward, we're dealing with 100% owned, we're dealing with a parent subsidiary, this is related party, and this transaction would not be recognized. This is essentially a transfer between one entity to another. Pierpoint's adjusted basis of the land on the date of the sale was $8,000. So we're showing the original basis from this sale that didn't really happen. So this is still the basis. You can't just adjust your basis. And remember, this could be viewed as something malicious because a higher basis is beneficial. So you can't just keep selling your own assets to your wholly owned subsidiaries or to your parents to keep increasing your basis. Because then eventually when you sell it to an unrelated taxpayer, that's usually out of your control, and that's why that's taxable or recognized for tax purposes. During the current tax year, Sunshine sold the land for $9,000 to an unrelated taxpayer. What's the gain or loss here? Simply put, we benefited, we got a gain of $9,000, and what was the basis? It's trying to trick you to maybe think it's $10,000, but here it's going to be $8,000. We're not recognizing this original transaction as if it happened, so we're maintaining the parent's basis. Final answer here is going to be $1,000, the difference between the $9,000 and the $8,000. Next up, which of the following statements regarding an election to file a consolidated tax return is correct? All right, first one is that intercompany gains are eliminated. And yeah, I think that does happen during consolidation, so I'm going to leave that as a possible answer choice. Next up, the election may be revoked by the parent of the group at any time. And not at all. Actually, the decision to file a consolidated return is not easily revocable. It usually is going to require the permission of the IRS, and you may have special conditions if you choose to do that. What about net operating losses arising after the election must first offset their income from separate return years? While offsetting our various gains using losses from other entities is totally an attribute of this, there's no requirement that you need to go about it in this order. So yes, NOLs generally can be used to offset income in a consolidated return from other entities. However, the use of these NOLs from separate return years is subject to certain limitations, and this, as a requirement, is not correct at all. It's not anything we talked about, so I would eliminate that one as well. And then final one here, letter D, each member of the group is liable only for its own tax liability. That's completely against what we discussed. You share that liability at the end of the day. That's why you got to assess, is this a good or a bad idea to consolidate? Sometimes it could be a good idea, sometimes it could be a bad idea. Final answer here is going to be letter A. Intercompany gains are eliminated. Don't fall for those tricks. Don't fall for those almost correct answers. Don't fall for those blatantly wrong answers. You'll do well. Keep up the good work and keep practicing, and I'll see you in the next one. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.